Welcome to Infoline.com. There is a difference of opinion, that's why the world exists, and so does the markets. With markets looking forward to the upcoming Fed policy meet, there are divergent views as far as the interest rate action by the Fed is concerned. Some are of the opinion that Fed will maintain a status quo on the interest rate, while some are of the opinion that Fed will maintain a dovish or a hawkish stance. But we belong to a minority camp where we believe that Fed will go for a 25 basis point hike. Our stance is justified by the fact that the flow of macroeconomic numbers, especially from the US side, has been on the positive note. If you look at the GDP numbers, the second quarter GDP numbers, the GDP grew by 3.7%. And the most important part is the consumer spending. We need to understand that 70% of US GDP is contributed by consumer spending or the retail sales, and they are growing at a healthy rate. If you look at the numbers, they grew by literally 3.41% if you look at the second quarter. And if you compare the prior quarter, they grew by 1.8%. It proves a point that US economy remains relatively resilient to the global economic shocks or turmoil which we are seeing in Europe, Japan, or for that matter in China. So all this justifies a stand that US is definitely going for a rate hike, and that would be accompanied by some kind of dovish stance where they'll actually convey or elaborate that that could be a long pause after the first rate hike. So that means the subsequent rate hike would happen after a long period of time. Now, what are the implications of markets? We believe that markets would rally post rate hike. There could be a knee-jerk reaction on a transient note, but overall I think the broader trajectory in equity markets per se, I think is from the higher side, because markets will get a sigh of relief. Because if you look at investors' mindset or the market participants' mindset, they are tired of rhetoric where people are constantly talking about the probability of a rate hike for quite some time. But looking forward, they'll get rid of it and they'll try to focus on some positives which is emerging from economies like India. So in a nutshell, I think the rate hike would be kind of an impetus where markets will look forward to a lot of positives and would give an impetus to the overall broader markets.